What's good, all my trader and investor homies? It's your boy Kevin. This is Touchdown Trades. I'm your trading BFF, your stock market bestie. In today's video, we're going to be talking about the top 5 most undervalued EV stocks. EV as a sector has taken a big, hot, steamy dump. It's crashing, and that is giving us the opportunity to buy some great companies at a great discounted price point. You know what they say, when others are scared, we buy. Buy the dip, sell the rip, baby. Scared money don't make money. So in today's video, we're going to be breaking down 5 EV stocks. My top 5 EV stocks that are undervalued, trading at price points that are just too cheap, and I think have long-term growth potential. They're going to the moon. If you're new to the channel, this is Touchdown Trades. We talk about the top stocks in the market every single day, so consider subscribing and do me a favor, as these videos do take a long time to make. I put a lot of research and effort into these videos, so do me a favor and like the button. Just go down there and start clicking all the buttons. These are 5 EV stocks that have taken a hit from the overall EV sector pulling back. Everybody said that the EV sector was just a big bubble and that it was eventually going to pop. And the people, the critics, the haters, they're sitting on the sidelines laughing right now saying, look, pointing and laughing and saying the bubble has burst. And I don't believe that. I just think this is a pullback. Every big sector has pulled back in its time, and this is just a blip in the radar. And a few years from now, the people that weren't scared, the people who took a shot on these undervalued companies, are going to be the ones pointing and laughing because their accounts are going to be on the moon like Neil Armstrong, baby. So let's quit wasting time. Let's break down my top 5 undervalued EV stocks. And as always, let's secure that bag by making smart investments and sound trades. Let's get it. All right, trader and investor homies, let's talk about my top 5 undervalued EV stocks. We've seen a significant drop in a large portion of the EV sector. People are saying the bubble has popped, and I don't buy it. I think this is just a blip in the radar. I think this is retail traders' weak hands getting flushed out before the real move takes place. And I'm using this as a buying opportunity. Scared money doesn't make money. Buy when others are fearful. All those sayings are coming true in my mind right now, and I'm using it as a buying opportunity, so let's jump right into them. Before we get started though, check out the link in the description after the video if you want to get 3 free stocks valued up to $1,600 after the video's over. Click the link for Webull in the description. You sign up, deposit $100 or more, and you get 3 free stocks valued up to $1,600. You can get a share of Google, Facebook, Starbucks. Just, you can't beat that deal. The best deal out there right now and the best broker out there right now. So check out the link in the description after the video's over. Stock number 1 is going to be ticker symbol RMG. RMG Acquisition Corp is merging with Romeo Power Technology. During the gold rush, it wasn't the gold miners who got rich traditionally on a high scale. It was the smart people who came in, opened the general stores, sold the shovels, sold the pans for gold, and those are the people who got rich. And this is the same logic here. There's going to be a lot of EV auto manufacturers who don't make it, but there's going to be a lot of battery companies and charging companies and companies who feed the EV auto manufacturers who make a lot of money. And I think Romeo Power Tech is on pace to be one of those companies that benefits from this wave. They already have an existing customer base with customers like Bluebird, BMW, Borg Warner, Nikola, Green Power, John Deere, Kenworth, Workhorse, Lone Star Truck Group. They already have a massive existing customer base to build off of. The market cap for Romeo Power is expected to be around $1.3 billion after the merger. And let's take a look at expected revenue growth over the next few years. 2022, $412 million expected revenue. 2023, almost a double in revenue to $765 million. And then at 2025, you got $1.65 billion in revenue, giving us a negative price to sales ratio, or a price to sales ratio less than 1, with that is just too cheap for that type of growth, in my opinion. This Romeo Power is extremely undervalued if it can hit these sales numbers, these revenue numbers. We all know the big money is going to be in the fleets, in the commercial vehicles, and Romeo Power is targeting this sector, which I really like to see. You got the Class 1, Class 2, Class 3, all the way down to Class 8. Romeo Power is going to be supplying some of the biggest EV companies with their batteries, and this company is going to have growth, unprecedented growth. I think they're going to surpass revenue expectations. Not only, in my opinion, is RMG too cheap, it's also very low risk because it hasn't made a huge run up like the other SPACs, the other EV companies have when the EV sector was really strong. It only ran up 15% or so and has given it all back, making this a very low risk play. The big risk with investing in a SPAC pre-merger is that the merger doesn't go through. I don't see that happening in this situation. And even if it did, you're not risking too much because it hasn't made that huge move that we typically see. So I'm putting a 12-month price target of $15 per share on this RMG. That is 50% upside. I really like this company. Remember, the gold miners were not the ones who got rich. It was the ones selling the shovels to the gold miners. And Romeo Power is selling the shovels to these EV auto manufacturers. Ticker number 2 is going to be SBE Switchback Energy Acquisition Corp. And this is another company that applies to the gold mining concept, selling the shovels. This is an EV charging company. Another SPAC, Switchback Energy, is going to be merging with ChargePoint, the US's biggest EV charging company. And this is why I love EV charging companies, the business model, the addressable market. The addressable market is literally everywhere vehicles park. You can put an EV charging station, and when the EV penetration rate is 75-80%, you just have that membership program. You put EV charging stations everywhere, and it's like having vending machines everywhere, and people just park, pay the fee, charge the car, and the revenue is going to be gigantic. The addressable market, EVs are projected to be 10% of new vehicles sold in 2025, 30% in 2030. So the growth rate is straight to the moon. And by 2050, I think we see 80-90% of people driving around in EV cars. The combustion engine sales are going to look like that, while EV is straight up. It's just common sense that an EV charging company is going to be benefited by the growth in EV auto sales. A rising tide lifts all boats. Let's talk numbers. ChargePoint is expected to go to market with a market cap of $2.4 billion. Let's look at the revenue projections. And with a 3% EV penetration rate, they see a $1 billion revenue annually. So by 2025, they said they expect 10% EV penetration, so that would multiply that by 3. So $3 billion revenue annually, let's say 2025, and that just keeps climbing. And as EV grows, this company's revenue is going to grow. This stock hasn't made a huge move, and I think it's just too cheap because it's just going to grow by default. It really doesn't have to do much. All they got to do is put the charging stations out, create a subscription model. You pay $50 a month and you can charge your car an unlimited amount of times. It just makes sense, and I think this is a very sound business model that's going to grow without much effort. Take a look at the daily chart here, and we can see that it made a nice run up after the merger was announced, but we're getting the opportunity to do what we love to do on this channel, and that's buy the dip, sell the rip. It hit highs of $17. It's coming back down, testing this $13 level, and I think it's an all green lights buy at this $13 level. I think this stock is too cheap today, but 3 years from now, it's going to be up 3-4x. So I'm putting a 12-month price target of $25 per share on this SBE stock. I think it's too cheap right now, and as EV grows, the EV penetration rate grows, this stock's revenue is going to skyrocket. Ticker number 3 is going to be the Stallion Workhorse. WKHS, we're not going to go into too much detail. We all know what Workhorse does and why I love Workhorse, but it's just too cheap. It's just flat out too cheap. Let's say Workhorse has a 80% chance of getting the USPS contract or a portion of getting the USPS contract, like I believe. I think it's upwards of 90% chance that they get a portion of the USPS contract. And when it's announced, it doesn't matter if it's a year from now or 2 days from now, when it's announced that Workhorse is getting a big chunk of the USPS contract, this stock is going to skyrocket. I think it goes up to $25 the first day that it's announced, and then we just see a couple weeks of just straight up action. So I think this stock is undervalued. Trading at $15, $16 is just too cheap in my opinion. Ticker number 3, the big green monster, HYLN, HYLN. I've been saying it's undervalued since $27 because I still think it's undervalued, and I've been buying in my small account, the $1 Million Challenge, and I'm going to keep buying the lower it goes because this is the bridge to total electric for the big Class 8 semi-truck. That sector, the fleets are going to have to be eased in to EV. These trucking companies don't want to change. They want to be able to drive 500-600 miles straight without having to stop and charge an EV semi-truck. And I believe HYLN is going to be able to use this as a competitive advantage. Sure, they're not going to be seeing any real revenue until 2023, late 2022. But in my opinion, the further it drops, the better a buy it becomes. That's just common sense. But I think this company 3, 4, 5 years from now is trading over $100 a share. So I'm going to be just loading the boat on any more dip opportunities. I'm adding all the way down. I'm riding this baby to the moon. Ticker symbol HYLN. The 5th and final ticker is going to be another EV charging company, BLNK Charging, ticker BLNK. This is an extremely undervalued EV charging company, similar to Switchback or ChargePoint. This stock is going to benefit as more and more people drive EV. All they got to do is put their charging stations around, build that subscription model up, and this company is going to be a $5-6 billion company a few years down the road. So like ChargePoint, BLNK services not only commercial, but residential. They also put their charging stations out front of businesses, grocery stores, parks, everywhere. Like the ChargePoint investor presentation says, they can literally put their charging stations anywhere cars park and get revenue from them. They make a subscription model. For example, pay $40 a month. You can charge your car anywhere there's a BLNK charging station, having an infrastructure of charging stations, and the revenue just comes in. It's freaking genius. And I want to invest in BLNK and ChargePoint because I think they're both going to be successful. Right now, BLNK Charging has a market cap of $269 million. That is just flat out too cheap in my opinion. We saw the expected growth rate for ChargePoint, and I think BLNK can match that. Of course, ChargePoint is a bigger company, but I think BLNK is going to grow into a huge giant company as well. So this has a market cap of $260 million right now. I think in 2 years, this is a $3 billion company. As EV grows, this company is just going to grow by default. $3 billion company, so it would need to grow by 5, 6, 7, 8, 9x to meet that. And I think it has that potential. I'm going to put a 12-month price target of $20 a share. That's going to wrap this video up, guys. I think this is an all green lights buying opportunity for some of these really good EV companies. Sure, there wasn't a lot of EV companies that had no business making a huge move. There was a lot of penny stock EV companies that just came out with EV press releases to ride the wave and then dump on their investors. But there's a lot of great EV companies that have suffered from that and have pulled back significantly. And I think we should be buying this dip and taking advantage of it. And a year from now, if we don't, we're going to be kicking ourselves for not taking advantage of this situation. So I hope you guys got something from the video. If you did, do me a favor and hit the like button. It helps tell YouTube that these videos do carry value, and it helps YouTube to promote my channel. Also, if you're not yet a subscriber, consider subscribing. And what are you doing? And hitting that notification bell so you get alerted every time I post a video. All right, guys, that's going to wrap things up. Until next time, peace out.